Hi, Investor Nation and Tasty Nation. Today I'm going to talk about the Federal Reserve. There are a lot of people on the internet and in other media that like to give their opinion on what they think the Federal Reserve will do at their next decision meeting. Well, all of those opinions I think are pretty much useless, especially when we can just go directly to the market and see what the market prediction is. I would much sooner trust the market rather than someone's opinion. Okay, so recall this is the dynamic yield curve. I showed this in a previous video. And if you haven't seen my video yet on how to bet on interest rates, make sure you check that out. The yield curve here shows the interest rates at the different time periods, starting at the overnight rate, then the 3-month, then the 2-year, the 5-year, 7-year, 10-year, 20-year, and 30-year. So we would expect interest rates to go up over time, depending on how long you lock your money in. But the Federal Reserve controls the very short end of this curve. So you can think of it as a whip. So when the Federal Reserve intervenes, I like to think of the analogy of cracking a whip. So the Federal Reserve holds the handle of the whip, which is the very short end of the yield curve here. And the rest of the whip extends out in time here. As you extend out in time, the Federal Reserve doesn't have a lot of control over that, although they can influence it by what they're doing to the handle. So I like to use the analogy of cracking a whip. So on the short end of the yield curve, that's the overnight Fed funds rate. How do we know what the Federal Reserve is going to do on that short end? Well, it's very simple. You can just look at the futures market. There's this thing called the FedWatch tool. And I put a link to this in the show notes. So we've got 38 days counting down to the next FOMC meeting, which is March 16th, 2022. And we can see the market is already predicting what's going to happen at that meeting. So this is the current federal funds rate, the overnight rate of 0 to 25. It's a range. This is a range of 0 to 25 basis points. So if you don't know what a basis point is, all you have to know is that 1% is 100 basis points. So 0 to 25 basis points, that's 0 to 0.25%. So that's the current target rate right now. And the market, which is all the buyers and sellers in the futures market, is predicting that come March 16th, there's an 85.7% chance that there will be a hike of 25 basis points. So if you take that range of 0 to 25 and you hike it by 25, you get a range of 25 to 50. So the market is actually predicting right now 100% chance that there will be a rate hike at the next meeting. And that's broken up into two different possibilities. That is a hike of 25 basis points and a hike of 50 basis points. So the market is predicting right now that there will be an 85.7% chance of a 25 basis point hike, but there's also a 14.3% chance that there'll be a 50 basis point hike. If you add these together, you get 100%. So what does that mean? The market is saying that there's no chance at all that the Federal Reserve will not hike on March 16th. So if anyone tells you different, the market does not agree with them. Now, could the market be wrong? Could there be a surprise? Well, yes, that is possible, but it's a very low probability. So there's a lot of talk earlier in January as to whether or not the Fed would hike at the first meeting. So let's look at historically what the futures market was predicting for that. Okay, so the last Fed meeting was January 26th. And leading up to that, I heard a lot of chatter in the media saying that the Federal Reserve was going to hike. Well, anyone who believed that, all they had to do was look at this chart here. And towards the end of 2021, going into January 2022, the blue line never went below 90%. So if anyone thought that there was going to be a Fed hike on January 26th, there was only a 10% chance of that ever happening. And that would be the orange line here. So you can see the probability of the hike on the orange curve there spiked a little bit at the beginning of January and then just crashed into almost zero chance towards the end of January. So that's it right there. We don't have to speculate on these things. Just look at the market. The market is right most of the time. And that's how I base all my trading on, is what the market prediction or the expected move of a particular price is going to be. So if I pop back to the current predictions, so the next Fed meeting is March 16th, but then I can go to the one after that, which is May 4th. So rather than two possibilities, there's actually three possibilities that the market's predicting here. The highest probability is that we're going to be at 50 to 75 basis points out to June. There's now 4 possibilities out to July. There's now 5 possibilities, and September, same thing. It's starting to look more like a normal distribution here. So there's just more possibilities of things that could happen the further you go out in time. There's more uncertainty, of course, the probabilities are smaller for each individual option. So this is very, very similar to how we trade options, which is betting on the probabilities of something happening or not happening. So this is just right now what the market is predicting. As time ticks closer towards September 21st, the possibilities of what might happen will start getting narrowed down. So likewise, for the March 16th meeting, these are the two possibilities here. And this is just what the market is predicting right now. Now, as they say, markets can move. So as time ticks closer towards March 16th, you can monitor this page and just see, is the market prediction changing at all? So these predictions are not perfect, but they really are the best we have. Okay, so there you have it. This is how we know with a very high degree of certainty what the Federal Reserve is going to do. We don't have to speculate. We don't have to guess. We don't have to listen to some guru on the internet or the media. We can just look what the market is predicting. And we know most of the time the market will be right. There's a lot of money on the line here. This is the whole world betting on this market. The Treasury market is an enormous market. There's multi-trillions of dollars on the line here. And I'm sooner going to trust that market rather than someone's opinion. Okay, well, thanks for watching. And if you haven't seen my video yet on how to bet on interest rates, make sure you check that out. See you next time.